Hi, and welcome back to my channel where we talk about potentially interesting investment opportunities. And this week, I want to start a new little mini series. A series of videos that focus more narrowly on one specific topic. And yeah, from this my new cool trailer, you can probably guess what it is. It's about what I think will be one of the most potentially interesting developments of the next couple of years, which is reshoring of industries back to the United States, which I think will be a big development for a number of reasons. And I don't want to value it in terms of ethically considerations or morally or create like a normative roadmap to how this should happen. So I'm not saying what is happening is good or bad. What I'm more interested in is, okay, how can this be potentially an interesting opportunity, and which kind of companies that are publicly traded that individuals could invest in could profit from this. And yeah, of course, I mean, there it's obvious what is the reason for that. So we have a new U.S. president in Donald Trump who's very open, vocal about this, and he's pushed out a number of new executive orders and regulations, and also just from his day-to-day politics, he's really trying to promote bringing reshoring in terms of bringing industry back into the U.S. Also, because I think a big factor that is not talked that much yet, it's not only about tariffs, which of course they're being used as a political tool, so they're being put on and then taken off again. But what is really obvious to me is the reduction in regulation. So rolling back labor laws, environmental laws, product consumer safety laws. So again, I'm not saying this is good or bad. I'm saying it's what I'm looking at. So all these kind of steps, which makes it more easier or cheaper for companies to produce back in the United States. And maybe I will make a single video talking more about this development, more from a looking at this overall development kind of perspective. But today I want to focus again on one company which I think could be a big winner of this reshoring to the US development. And as you can probably guess already, it's 3M. 3M, a big industrial company from Minnesota, from the heart of the United States. Of course, today they have a global presence. And yeah, they are famous for their Scotch brand. Is one of their most well-known brands. So they're very much known for adhesives, but yeah, they have everything that's non related to adhesives and stuff that glues, but also like these kind of sportswear. But I mean, they really operate in a variety of industries. So not just these consumer brands that they're probably known for, but all kinds of industries. So automotive is a big industry, electronics, manufacturing, and that's what's interesting to me. And then, of course, transportation, government, and the big one, which is not here, which is hidden underneath the other ones, which is defense. And, of course, healthcare. But healthcare, which we'll talk about more, is interesting because they recently spun off the healthcare division. So there's a new company called Solventum, where they spun off the healthcare division. So all these kind of products for dentists, for example, look at this kind of stuff. Also like tapes and safety masks. But so why do I think this is interesting? Because I think if you look at their products, what they do, like, here we have defense. So, I mean, yeah, they're also building entire fridges, but they're building machineries. They're building these little. They're building adhesive tapes. They're building. Plastic products. They're building little metal products. Everything that is used in all kinds of different manufacturing processes. And for example, let's go here. Let's look at what they do for automotive. So all these little parts, like here, this little scotch tape for the automotive industry, the little spray gun here, for example. So yeah, all these different kind of manufactured products, which I think are really much some of the products that could be coming back to the US. So of course, I think big producers overall, for example, car manufacturers could profit, but I think also this entire supply chain that comes beneath it. So adhesives, plastics, metal parts, all of this could profit. And I mean, let's look at the presence of 3M in North America, in the United States. So they have all these different plants in the US. I had the number before, I forgot how many plants these are, but I think it's like 40 or something. Of course, don't get me wrong, they are not a fully only US based company. So they are they have 22,500 employees in the US, but even more, 39,000 currently outside the US. So they're still very much a global company right now, but I think their product mix and their existing production facilities in the US set them up ideally to profit from this new development of reshoring and bringing industries back into the US. At the same time, I don't think that only like hardware producers, manufacturers will profit from this. So I think also IT companies or companies that sell services will actually profit from this. But as I said, we'll probably go into this in another video. But I think really 3M for me, really one of the companies really set up big here. I mean, just I looked at a list of recent executive orders signed by President Trump, and I mean just going unleashing prosperity through deregulation. So yeah, that's pretty broad, but deregulation is good for manufacturers. Reducing barriers to domestic pharma manufacturing. So yeah, everything from syringes to safety masks but probably also vaccine. And yeah, we've seen that 3M has a lot of products that could really profit from that, or even more. They're the company that they spun off, where they still hold a 19.9% interest in the company, will profit from that, even though they said they will reduce the interest in the company. Or EPA deregulation actions. So EPA, Environment Protection Agency rules are rolled back. Again, makes it easier to manufacture, because manufacturing is messy and pollutes the environment. And another order that he signed, orders impacting environmental deregulation. Same thing. So really stuff that could help companies produce in the US. So let's look at 3M's actual stock price performance. And we've seen over the past couple of years, we really had this high valuation at the onset of the global event that happened. And yeah, there was a big part of it was masks. So 3M, I think, was one of the biggest players in the world producing actually equipment for the medical industry, but also specifically masks. So they profited big. And then, of course, when the demand for these kind of products fell, also the income from 3M fell. Recently, we've seen here a little bit of a reversal. So they really bottomed here in 2023. And ever since then, they've already been increasing back almost 100%. So it's not like we're at the very bottom here. And I think this development is also really much related to litigation. So let's go, because the company is very much involved into the big problem that they have is with lawsuit and litigations. So because of the manufacturing business with is messy, they have to deal with a lot of legal actions by communities, which they have to adhere to. And now I think it's a good moment to list, okay, what is actually positive for the stock and what is negative for the stock potentially. So what makes it an interesting investment case? So as I said, they have this strong manufacturing base in the US, a strong position in the supply chain of a lot of manufacturing industries. And the second one is they recently settled 2 major big lawsuits, one with Minnesota Council and one with, I think, the water agency in New Jersey or something. So 2 big lawsuits, they settled favorably. Just this, what I talked about in terms of regulation, so this pro-business environment that is changing in the US, which could really help them. So that's really the pro case. What's again the contra case, I think, is they have this legal risks. So they have this legal risk for most of all with their forever chemicals. So they keep getting involved in lawsuits. They have these and related to that is that they actually have to change. So a lot of their production is using forever chemicals, and they actually promised that by 2025 they will leave. 2025 at the end they will completely stop using forever chemicals. So there's a big risk for them if they will be able to manage this transition. And thirdly, they just continue to have high debt levels. So I talked about the spin-off of Solventum, the health company, and they used this to put a lot of debt on that company. These spin-offs are always, I don't like them because they're always really tricky to understand as an outsider to, okay, did they use the spin-off to push all the debt on this company? For example, I personally had some money invested in AT&T, and then they spun off Warner Discovery. And I think what they really did is use the spin-off to put a lot of debt on Warner to reduce the debt load on AT&T. And I'm not yet pretty sure, but I think 3M tried a little bit similar. So they put a lot of debt on Solventum. I think not on the same extent, but they still have very much high debt levels. And high debt levels is still a risk to the business. All right. But looking at the stock price, we still see a PE ratio of below 20, and still a potentially good dividend yield. And if I think what will happen is that a lot more manufacturing and parts of supply chains will come back to the US. I think they could profit big time, and I think that's not priced in yet into this stock price. But of course, as always, make up your own mind, make your own research. Let's look into the actual numbers that they reported. So let's look at the Q1, their quarter 1 earnings that they put out, and see what we have here. So they had sales growth 1.5%. They had earnings per shares up by 10%. We will see later when we go into the Q10 that it actually went up even more than that if you go for non-adjusted basis. Free cash flow of 500 million. Yeah, it's not that great, but it's still good. Here, what more on the qualitative side. So interesting that they launched 26 new products. So they plan to launch 250 new products, but it was pretty cool to see a company that effective and initiative. So yeah, they just keep on new adhesive tapes for different industries and stuff like that, so little plastic parts or stuff like that. So they keep rolling out products like this. And yeah, interesting. What I really like, productivity and cost control. We will see that their operating costs really went down, which is pretty good. Yeah, and they keep returning money with buybacks and dividends. And yeah, let's look here at the chart. So sales, slight increase. Operating margin went up. It was good. Not the best of margins, but still good. But I mean, again, think about these little parts that they have, and they compete with these like really low cost factories around the world in Vietnam or China, which they have themselves as well, of course. But yeah, this is usually not the industry where I have the biggest of margins. But yeah, that's potentially where they could increase if they have this position in the US that they can exploit more. Earnings per share, as I said, up to 1.88 on an adjusted basis, as I've said, could be even higher. And then look, now it gets interesting looking at the different industries. So the largest one is safety and industrial, and so all kinds of different industries that they serve there. And I think safety and industrial, so this is a one which is going to profit big from this reshoring trend where industry is moving back, new manufacturing again increases in the US. So I think this is already the strongest sub-industry sector, and I think that one is really poised to increase. Transportation and electronics also increased 1.1%. And I think also really one that's going to increase. Consumer up 0.3%. Yeah, I'm not sure if consumer really is one that could profit from this reshoring trend. So that's not the one that I'm really interested in. And then some guidance. So they in line with the guidance. So earnings per share of full year earnings per share of 7.9. So they're saying that are on track to reach these earnings, and that's also why the stock really rose recently, because yeah, they really analysts really like that they're staying in line with the earnings per share, and that they kept in line with their guidance. All right, so let's look at the Q10 filings. So let's look at the actual numbers instead of the kind of dry presentation. Yeah, the colorful presentation, of course, this is more dry, but yeah, okay, so let's look at net sales. So that's why I think it's always important to look at the Q10 earnings, because that was not the Q10 filings, so there are the actual filings. Because, for example, this was not in the presentation, the nice colorful presentations, is that they actually have a slight decrease in the net sales. So from 5.9 billion down from 6 billion in the first quarter of 2024. Again, I think comparing Q1 is always difficult. For all industry, Q4 is very important. And it's not a dramatic increase, but I think it's still interesting. And yeah, not the best of signs that the overall sales decreased. Interesting that they managed to lower their operating expenses. So 4.7 billion down from 4.8 billion. So this is very, very, very good. And here the operating income from 1.2 billion increase from 1.1 billion. So I really like this. So we're seeing, even though the revenue slightly decreased, they managed to increase the operating income, which is pretty good, and also lower the expenses. So and then we have the income. Income here, I think the important number is the attributable to 3M. You could also look at that one, the one with net income from continuous operation, including non-controlling interest. So the one where they also have the income where other investors have like a joint interest in an operation. But I think the one more pure is here, the one net income attributable to 3M, and that is up to 1.1 billion from 928 million, so that's pretty good. And then here, earnings per share, what I said before. So we had the earnings per share that they showed in the investor report, which was $1.88 per share. And we see that the actual earnings per share is even higher, 2.04 earnings per share. And this is because of the adjusted reporting standards. So this is the number that they have to report here, the earnings per share, 2.4. But the management chose the other number of 1.88 because I think this number includes revenue that they earned through the sale of the Solventum. So it's a little bit of a 1.88 is the more realistic number that you will use to compare to the next quarter and the quarter of Q1 of 2026. But with that, it looks even better. So with this earnings per share of 2.04, up from 1.67, so that's pretty good earnings per shares increase. But as I say, 1.88 is the more realistic number, and still pretty good that they have this earnings per share increase. And let's look at the liabilities, at the debt levels. I said, they have here, they have those liabilities of 35 billion, which they managed to reduce a little bit. As I said, I mean, they likely pushed a lot of debt that they had out from 3M onto their the new company Solventum with the healthcare division. So yeah, it's not as nice as it looks that they actually managed a little bit, 500 million, to reduce the debt, but it's still good to see that the debt is going down, and a lot of it is long-term debt, and other liabilities, which is all kinds of different stock options and company vested interest and stuff like that. So yeah, definitely a number that they have to reduce, 35 billion, pretty high. Yes. All right, so let's look at, what else did we want to look at? Yeah, I wanted to look at this overall story. So yeah, currency exchanges, I don't care. Assets, I don't really care too much. So I briefly touched on this big topic of commitments and contingencies. So this is the whole topic about this problem with lawsuits related to Forever Chemicals. So the company and some of its subsidiaries are involved in numerous claims and lawsuits and regulatory proceedings worldwide. So yeah, if you invest in these companies, you really have to be aware, okay, they are involved in so many different legal battles and in regarding to Forever Chemicals and also other chemicals. And yeah, it's also, I mean, I'm again not morally valuing in this, so you just have to be aware that you are investing in a company that is involved in those legal proceedings. And I mean, they say themselves, so they're talking about different legal ones. For example, they have these respiratory lawsuits where they already had to pay 511 millions. And interesting, I think here is to say that the company cannot estimate the amount or upper end of the range of amount which the liability may exceed the accrual of the company. So, I mean, they have to admit that this is impossible for them to really understand how much they will have to pay for these legal battles. So really something you have to pay in mind. And lastly here, that what I said about the risks of product portfolio. So because of these legal battles, obviously they cannot continue to use those Forever Chemicals. And they said that by 2025, by the end of this year, they will stop using Forever Chemicals at all in their products. And of course, this is another risk for the company. Will they actually manage to replace those chemicals effectively from their product mix? All right. We went through we went through the numbers and we went through the profile of the company, and yeah, we looked at the financial performance and also the risks. So yeah, now it's really up to you to make up your own mind if this is an interesting investment case. So already, I think for a really establishing company with a solid track record. So this company has a I don't know how long this company is around, but more as a 40-year, I think almost 50-year track record. Solid manufacturing company, solid company. They really have a strong innovation pipeline. I mean, you saw it, that they plan to launch 15 new products this year alone. And I think a valuation under 20 PE, very reasonable for that. And then, I mean, my overall thesis, which is that this will be one of the companies, if not the company, that will profit most from this new deregulation trend in the US and this new push to bring manufacturing and industries back into the US, inside the US, with their existing strong manufacturing base there. I think really makes it an interesting case. But yeah, of course there are the risks that I talked about, the product mix, the legal liabilities, big risks. So yeah, make up your own mind, and let me know what you think about 3M. See you in the next video.